The Apple Store Epic saga continues because Epic Games, which was suing Apple over the terms of their agreement with the Apple Store, is getting some other interesting news right now. So Epic had sued because Apple takes a 30% cut from any developer anytime somebody purchases anything on the Apple App Store or in an app. Epic said that wasn't fair. Apple delisted them, and now there's a lawsuit going on, right? So Apple actually came out and they made an announcement here, and they said that developers who earn $1 million or less from the App Store, they're getting their commissions cut from 30% to 15%. So we're seeing some results already from the attention and from the lawsuit here that, you know, Apple's trying to take a different stance here. This is the first time, actually, they've never changed the App Store financing structure since 2008 when it was first implemented. And now they're doing that right now with this lawsuit going on to try and make it look a little bit better for them. And this is important for Apple because margins are higher on their services than on their hardware. Actually, in the last quarter, it was 35% higher margin on services. So if Epic and this lawsuit plays out and they have to really cut these fees, that 30% fee, they're going to be making a lot less money. And Tim Cook has said that he wants to kind of shift the company more from hardware to services and recurring revenue. Norwegian Cruise Lines announced that they're going to be issuing new shares, and it really beat up the stock here. They're going to come out with 40 million shares priced at $20.80. And they're doing this, of course, to raise capital because the cruise lines were originally supposed to actually open up in October and be able to have cruises again. It was delayed. Now it's going to be going into next year. So now they plan to use this money for general corporate purposes and navigate the shutdown. And based on this news, shares were down like 5% on this. But the company is trying to survive so that those shares are still worth something in the end. They don't go bankrupt. Boeing finally had some good news after just brutal news for the past few years. The Federal Aviation Administration approved the return of the Boeing 737 MAX back to service. So they had halted this about a year ago. And actually, it was in March 2019 after there was a few fatal plane crashes. And there was this software issues and everything. So now that it's come back and they've done some kind of new safety measures here, you have American Airlines already putting back commercial flights on the schedule for December 2020 with the planes here. So they're already ready to start using the planes again. Shares were up 5% on the news, but they still ended up, you know, on the week barely up at all. Nvidia came out with a lot of information here, and they had another good quarter. The sales for the third quarter were up 57% from the previous year to $4.73 billion. Their earnings per share were $2.12 per share. And now their guidance was revenue would be even better in the fourth quarter. So everybody always likes to hear good guidance for the next quarters. Their chips are used in a lot of products. They're used in gaming computers, supercomputers, data centers, and the devices that require, you know, like artificial intelligence to do heavy computations. So they're really making a lot of money on all of this now. And if you look at another interesting one, the Nintendo Switch actually has an Nvidia processor in them. So they sold 7 million Nintendo Switches in the third quarter. So that right there, you can just see a lot of sales for Nvidia just for that. And this is a milestone. Nvidia has just passed Intel as the largest producer of semiconductors and processors. So, I mean, Intel has been the top semiconductor producer for as long as you can remember. And Nvidia just knocked them off of that spot right there. Next up, we have former President Obama's book launch, The Promised Land. So his book actually was received really well. It sold over 887,000 copies on Tuesday, which, I mean, the publisher, they actually paid $60 million for the right to Obama's book here. And the print run was originally 3 million copies, and the demand was so strong they actually raised that to 3.4 million copies. On another interesting thing here, and the publisher was Penguin Random House. So this is a major endeavor for them to pay this much money and then have a successful book launch like this. The first day, the book also sold slightly better than the memoir from his wife, Michelle Obama. So he beat her a little bit on that. Next up, we have a stock filing for IPO, AirBNB. So Airbnb has been around for a little while here. A lot of people have been using it, but is it a good company? Is it a good company to invest in? So they filed the paperwork as basically doing a normal stock listing with an underwriter. There have been talk that they were doing a direct listing, which would potentially be better for the shareholders, but instead they're going to do this and it's going to raise additional capital. It can change right now, but I mean, it could change in the future, but right now it's estimated to be $30 billion for the market capitalization of the company. As you can expect, the revenue has been all over the place during the pandemic, right? So in the 3 months ended June 30th, revenue was down 72%. This is the same thing with the hotel industry getting all beat up here. Business then picked up, and in the quarter ended September 30th, revenue was just down 18% from the year earlier period. People started staying local, and along with the company's cost cutting, they actually posted a profit of $219 million for that quarter. But when you're looking at it as the whole, the company is still not profitable. For the year, they are still down $697 million that they lost for the year. So this company is going to have an IPO, and they're losing almost $700 million a year. So if you want to invest in a company that, even though it's basically like a gig economy business like Uber and Lyft, where they're not running the hotels or anything, it's just contractors, they're still losing money. So if you want to own a company that's losing money, that one's going to be IPOing soon. Next up, we have a COVID test announcement that came out that was pretty significant. Lucira Health actually received clearance from the Food and Drug Administration on a COVID-19 test that you can take at home. You can pick it up in a store and take it at home and you're good to go. So I thought originally this is like a great idea, right? People can just do the test really easily. You don't have to go to a special location and do it there. But then I found out, well, you actually need a doctor's prescription to go and buy this COVID-19 test. So my question is, if you need to go to the doctor to get the prescription, to then go to the store to get the test, and then go home and then take the test, I mean, why not just go to the doctor and they can tell you you're sick in the first place? But whatever. So anyway, the results on this one, it's a swab test as all the other ones are. And in 30 minutes, it can give you results. And they said that the test can show a negative result 98% of the time. And it can flag if you have an infection, it's successful 94.1% of the time. So over 90% efficiency there. I did a video a while back about General CienFuegos, who was arrested when he went to the airport in LA under these criminal charges for bribery and working with the cartels in Mexico. He's a Mexican general. And this was really significant. I mean, this is a huge figure that was arrested. Turns out Mexico didn't really like that, and they pleaded with the US government to say, hey, you know, can we have this guy back? Maybe you can drop the charges. So the US government said, yeah, sure. And now we're going to ship the general back to Mexico, where he will be a free man and will not be facing charges. Although Mexico did say that they will look at the evidence presented by the American authorities to see if they will prosecute him, which will probably go nowhere. So it's an interesting end to that story. Then we have the Roblox IPO, another IPO. We talked about Airbnb. So this company, Roblox, is a video game company that has an online platform. You log in a browser, and what they do is they make a platform for people to develop games for other people to play online. And they actually have a lot of developers doing this. And there's a lot of people logging in. It's a very social thing that you can do within a video game. And you know how the video games have been faring very well during the pandemic and with people stuck at home. So they make money by selling virtual currency called Robux. And users use that to buy like in-game items and stuff like that. This kind of reminds me of like Second Life, where people kind of develop the items within the game platform and sell it to other people in there as well. So they had revenue of $488.2 million in 2019. Sales this year were up 68%, and bookings were up 171% from last year. But of course, the majority of that is due to this whole pandemic situation. And just like most of the IPOs these days, this company is not actually making any money yet. They're not profitable. Seems to be the trend. They lost $203.2 million so far this year. And, you know, earlier they were valued at around $4 billion, but they didn't yet set the IPO price or the amount of shares that they were going to have out there. So we still have to see the announcements on that. Right now, though, they said that developers on the platform, and that's upwards of about 7 million people, They're estimated to earn around $250 million this year. And the company makes money from also taking a 30% cut of their sales. Pretty big right there, and similar to the Apple structure for the Apple app market. Lastly, we have some news from shoe companies. So surprisingly, shoe companies are actually doing well here. Shoe sellers, retailers are doing well while this pandemic is going on. You have Foot Locker had estimates of 63 cents a share for earnings, and they came in at $1.21. Same-store sales were up 7.7%. And another company, Hibbett Sports, which makes athletic footwear, they had estimates of 45 cents a share, but earned $1.47 a share. Same-store sales for them increased 21%. So these footwear retailers are really doing well during the pandemic. And for the last item, I just wanted to say, have you seen Bitcoin? Because we seem to do this in each video. It was at 16,000, just crossed 18,000. The question is now, when is it going to hit 20,000, or did it hit it already when this video was launched? So it's an interesting thing right there. And 20,000 is the all-time high that it hit before a few years ago. So we're going to see where it goes from here and where is the new top before it crashes again. Thank you everyone for watching. Tune in next week and I'll give you some more of the business breakdown.